Others have talked about becoming a one-stop shop, but they're nowhere close to getting there. And one of the reasons why they're nowhere close to getting there is because they don't own the technology.
SoFi just participated at Goldman Sachs Communacopia and Technology Conference this September 12th. In this video, we'll go over 10 key things Anthony Noto said at the conference. For those of you who like chicken nuggets, we have something a little better around the corner, and that's all the golden nuggets SoFi dropped during this event. So make sure to watch until the end of this video. We're not financial advisors, and this is not financial advice, so always do your own due diligence.
I was having challenges with my old bank. Lots of red flags. Yellow ones too. Fees, penalties,
Unnecessary fees.
playing dirty. So I broke up with bad banking and moved on with SoFi checking and savings. Now I get up to 2.0% APY on all my money and pay no account fees. Feels good to get my money right.
Banker disqualified.
Break up with bad banking. Get 2.00% interest and earn up to $300 when you set up direct deposit. SoFi, get your money right.
This month, SoFi closed the deal for a 3-year partnership with Los Angeles Chargers quarterback Justin Herbert as he kicked off another brand new SoFi campaign following SoFi's success with breakup with bad banking. According to SoFi CMO Webb, we're excited to evolve our breakup with bad banking campaign and continue to help members get out of unfulfilling banking relationships and move on with SoFi. With the stepped up campaign, SoFi will have weekly giveaways and a whopping $50,000. Without further ado, here are 10 points about SoFi's last conference. Stay tuned for a possible big revelation at the end. You don't want to miss any of this. Number 1, SoFi will be the best one-stop shop for your finances and the ultimate AWS of fintech, or what we like to say,
a great success.
Many other banks have caught wind of what SoFi has been doing, and a few of them have even been copying SoFi. Everyone knows who the real one-stop shop is. But don't take it from us. Let's hear it from the GOAT himself.
We have a very ambitious strategy. Others have talked about becoming a one-stop shop, but they're nowhere close to getting there. And one of the reasons why they're nowhere close to getting there is because they don't own the technology. We believe we can innovate for not only SoFi, but as we use those technologies to accomplish our objectives and our mission, we can then allow others to use those same technologies. We're building technologies before other people realize they need them, but when they do, they'll be available for our partners to use.
Number 2, stats on the lending market. We all know how SoFi's first product, aka student loans, seems to be not the greatest product at the moment. Back in the day, before the illness, SoFi generated $2.4 billion of origination volume just in the student loan refinance business alone. But just like what Commander Noto said, one of the perks of being a one-stop shop bank is that SoFi has different businesses that cope well with a high-rate environment, but some work best in a low-rate environment. Either way, the more flexible SoFi is in every economic scenario, the better. The personal loan market is one of those thriving in our current economy. Here's the blueprint of SoFi's plans.
Our growth is quite frankly really gated in this business by how much we want to spend on marketing. We have a very strict credit box. We try to underwrite our loans to 7 to 8% life of loan losses. So that's 680 FICO score and higher. Our average FICO score is in the 750 range. The average income of our personal loan borrower is close to $150,000. We've been able to gain a lot of market share there. The reason why people like that product in a rising rate environment is because they're consolidating their debt from variable rate debt into fixed rate debt. They're terming out over a longer time period.
So when the student loan demand makes a comeback and works side by side with SoFi's personal loans, it'll be the ultimate wombo combo for a successful earnings season. Number 3, SoFi moved from a refinancing market to a purchase market. SoFi takes part in the home loan market, and according to Commander Noto, about 60 to 70% of their home loans are coming from SoFi's existing members. And this says a lot about how much their members trust SoFi when it comes to financing their homes, which is often the largest purchase a person will make in their lives. In an era where gas prices and inflation are higher than Snoop Dogg, borrowers are less likely to refinance significantly when interest rates rise. Number 4, keeping the variable profit dollars, a hedging strategy. Some of SoFi's investors wonder where there's sustainability in the strong gain on sale margins, including hedges. Here's what Commander Noto said. For every product in the personal loan business, SoFi is aiming for a 40 to 50% variable profit margin. But how do they do that? They started with knowing the benchmark rate, the life of loan losses, cost of funding, and weighted average coupon needed to charge the consumer. So when the trend of benchmark rates spikes and the spread also skyrockets, SoFi passes those costs to the consumer with a higher coupon. This is what happens as the loan is underwritten. SoFi makes a move on locking in the variable profit dollars so they can hedge the rates charged to the consumer once the benchmark rates continue to spike. Number 5. SoFi's unmatched products in the finance space. If you've been a SoFi bull since day one, you'd know one of the biggest perks of being a bank is none other than having a lower cost of funding. SoFi has 3 sources of funding at the moment. One is the members' deposits, the next is the warehouse facilities, and the last is SoFi's equity itself. But on top of those 3 vehicles, SoFi can earn from the loans they offer in 3 ways as well. They can securitize and sell it in the securitization market, and they could sell it in whole loan form to asset managers, hedge funds, and banks. And SoFi can even hold it on their own balance sheet. When you combine all of those things, SoFi gets to maximize ROE, which is probably why we had a positive GAAP net income in the bank with around a 12.5% ROE for recent performance. Number 6, the perks of a SoFi member with SoFi Invest.
As well. So it's really unmatched in the marketplace. And the funny thing is, even when we give the consumer 2%, we're 100 basis points better off as a company than if we finance through warehouse facilities. So it's been a real home run there, and it's helped drive direct deposit accounts, which also spend more, and we've seen the benefit of that in our interchange on the checking account, debit interchange revenue stream.
Number 7, the future of cloud core banking services. We're sure you know Galileo and Technisys are SoFi's peanut butter and jelly. Now, let's talk about the tech and fintech. With SoFi's diverse set of products, many core technologies are needed to achieve SoFi's mission. SoFi built a core technology for lending and uses different core technologies for checkings, savings, credit cards, and investments that they license from another entity. In short, SoFi works with 4 different cores, and in the future, they want to keep just one for every product they offer. Galileo works well by providing a core technology and a ledger to its partners, and with Technisys,
And I will rule the world!
I think the biggest surprise is the number of inbounds that we've gotten and those interested in talking to Technisys and Galileo together from large financial institutions that sort of validated our thesis that they needed this technology as well. In terms of big wins, the pipeline is pretty rich. We hope to have some wins as we go into 2023 to share with investors. But at this point, we're deep in conversations with a number of partners. In terms of the product sets, we've already had partners adopt some of Technisys products, including SoFi, that they weren't previously using, and we anticipate continuing to see that trend. And then
Number 8, is 30% incremental EBITDA margin still possible? Is it? Let's hear the game plan from Commander Noto.
I thought it was important when we went public to establish our commitment to balance both investment and growth, as well as improvement in profitability. And so in an expansionary time period and a recessionary time period, our message is the same. We want to deliver 30% incremental EBITDA margins through the cycle. We want to reinvest 70% of incremental revenue back in the business as long as our growth rate is very strong at 20% plus, because we want to compound growth for decades. Similarly, we do have to show that the business can drive a return and can have attractive return on invested capital and return on equity and return on assets, and that's why we're committed to a 30% incremental EBITDA margin. Do we have more things to invest in than that? Absolutely. The only thing gating our growth since I've been at the company that I've seen is our ability to invest in that growth. Should we invest all of the incremental revenue? No, because I think that would leave us in a situation where investors would ask us where our long-term profitability would be. It's much easier for us to say we're delivering 30% incremental EBITDA margins. That's a leading indicator of 30% long-term EBITDA margins and the types of returns we think we can deliver. So we're trying to balance those two things through the cycle in a prudent way. Great.
SoFi currently has full-year revenue guidance of $1.5 billion and EBITDA of about $104 to $109 million. When asked whether SoFi will update this outlook, Anthony Noto had nothing to say other than the team is executing, saying there's no need for such thing. But on top of all that, the speaker asked something we bet you didn't see coming. Number 9, is SoFi up for another merger and acquisition transaction?
There's many others I could talk about. We have to keep our eyes open to opportunities they present themselves. but we also have to balance executing versus the distraction of M&A, and I think we've done a great job of that up to this point. We've been very strategic in our choices as it relates to large M&A. Right now, we're absorbing the acquisition of Technisys. We love what the business does for us from a strategic standpoint, what it does from an operational standpoint, technology standpoint, and we want to continue to execute against that. So unless something presents itself that's so game-changing as the last two acquisitions, and is super attractive and it's a must-do type of thing, we're going to keep our heads down to execute. There are small things we could always do less than $100 million to improve our execution and our capabilities, but I'd say right now we're heads down and executing on our strategy and delivering on the two deals we've already done.
Now, for the piece de resistance. Number 10. What keeps Anthony Noto excited about SoFi? If you ask Commander Noto why he seems so enthusiastic about SoFi's strategy despite the chaotic market, here's why.
Benefits that you might see.
Yeah, and I've said this to our company, I've said it to our board. The only thing standing between us and 20 million members now is us. Our ability to drive trust, reliability, and awareness. Every day that we market our products, we build more awareness. When people give us their money, they have to trust us. We have to maintain that trust. So it's just a matter of building the awareness, building in the trust, and the membership should follow. And the reason why I say the only thing between us and 20 million members is us is because we have the products. They're differentiated. We see the adoption of the products, so we know we have product market fit. We iterate on those products and we improve them, and that drives even more adoption. We see the cross-buying rates, and we see the satisfaction levels. So we're going to continue to invest in product market fit, continue to invest in differentiation, drive higher NPS scores so we drive more trust, and keep building that awareness.
Last but not least, and definitely not yeast, here's Anthony Noto, CEO of SoFi, delivering nothing but greatness for SoFi's legacy.
For our products. So it's taken us a long time to get here. It's been almost 5 years, but we're right where we want to be, and it's a matter of continuing stepping on the gas and moving away from everybody else.
A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. We'll do our absolute best to provide the most value possible. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufran, Jay Bone, and Alan. We really appreciate all the support. Thanks for watching. We greatly appreciate it. And until next time, peace.